Today we're going to talk about why I'm still buying silver at all-time highs and why I'm not worried about it at all. Welcome back to the RuralStacker channel. Thanks for stopping in, neighbor. Alright, so I've seen a lot of discussion about buying silver at all-time highs, and people are getting a little nervous about that, scaling down, holding off, selling, and I get all the points that they're trying to make, but for me personally, I'm going to go over why I'm not too worried about it. I'm going to still continue to buy gold and silver, and I'm not going to stray away from that. I got 30 to 35 years left of investing. Most of you know I'm only 34, so I got a while yet, and gold and silver serves a role in my plan, and that role doesn't really change because of the price. I get into it because stable, dependable, reliable, it's in my physical possession. I planning on liquidating some when I'm older, when I, to help with extra income while controlling my tax rate between IRAs, 401ks, brokerage accounts, regular employment, and then also selling some gold and silver. I can effectively choose my tax rate when I'm older and looking at retirement. So that's the main reason. Another reason that I did some homework on here to get some numbers that I want to put out there to put in perspective is that I'm constantly buying stocks within my 401k, IRA, HSA, brokerage account, and investing my money there, and that's a continuous cycle. Every pay, certain portions of my paycheck go into those automatically. Other times of the year I'll make other contributions to IRAs, things like that. And if you have a 401k with an employer, you're doing the same thing if you're contributing to that, and you're buying these stocks at all-time highs and near highs for them as well. So why not do the same with gold and silver? I'm gonna put one of my notes here because numbers on a video don't usually do justice very well, but the S&P 500, it experiences a 10% drop about once per year, and 44% of the time it spends within 5% of the all-time highs. 56% of the time it's within 10% of the all-time highs, so more than half. And 3 out of 4 times that you're making a contribution to your investment account and purchasing the S&P 500, you're within 15% since 1970. So 3 out of 4 times you're within 15% of buying at all-time highs, and nobody questions that with the stock market, right? You have the Nasdaq. Let's say, I don't do the S&P 500. I'd like to be a little bit more risky and get more into tech and industrials. I go with the Nasdaq. So okay, same thing. 10% drop 6 times in the last 10 years. So it's dropped 10% 6 times in the last 10 years, which isn't that many times. And also 45% of the time it's within 15% since 1999. So the last 26, 27 years, it's been within 15% of all-time highs. To put that into perspective with silver, let's go with $93. When I was gathering up these numbers, $93 was what the price was, and we're a little higher than that. Might be a little lower than that in the future, but just for an idea, for context here, we're going to do that. So 5% drop from $93 goes to $88.35. A 10% drop is $83.70, and a 15% drop, $79. 70%, so a 30% drop is at $65. So if we go back and we compare, let's say within 15%, right? Because 75% of the time for the S&P 500 since 1970, it's within 15%. For the NASDAQ, 15%, 45% of the time since 1999. So 15% is $79. So if we drop to 15% from $93, we're at $79. For most of my silver, if not all of it, at least all of it that's sitting here on the table, I'm still ahead. And a 15% drop, it's pretty significant, Even a 30% drop down to $65. Yeah, that makes some headlines, but 30% drop lately, I mean, it's possible, but doesn't really seem like it. But even if it does drop 30%, that's $65. And if we're okay with investing into stocks through our 401k, IRA, HSA, brokerage account, all like that we said, within 15% all-time highs, why are we not okay with investing in silver and gold at their all-time highs? 15% is 79. So anytime, if it's between 93 and 79, that's within 15%. Currently, that's why I'm okay with it. And putting these numbers to it, I think, adds a little context. That another way to reframe how you're thinking about it. And if I'm okay with one investment type buying at near all-time highs and all-time highs, I'm okay with it for other investment types. And ultimately, I haven't changed my position on gold and silver. I think they are valuable, and regardless of the price, that doesn't affect it where the price is at in history. So you might also say, well, the S&P and NASDAQ, they're not just one stock, they're a collection of stocks, and you'd be right. Silver and gold, they're one type of metal or two types of metal. So can you really make that comparison? Yeah, silver is silver, gold is gold, and that's true. But just like the S&P 500 and the NASDAQ, I think you still have diversification within the metals, more than what most people think. And now we'll go over that. Specifically with silver, you have different types. You got 35%, 40%, 90%, 999 bullion, sovereign coins, numismatic coins. So with the different types of silver, you have diversification there. You can even break it down even further with the different sizes of silver. Is a little bit of diversification. And why I say that is, there's probably a lot more people that can afford, or a lot more people that would be willing to buy 1 ounce of silver as opposed to 5 ounce bars or 10 ounce bars. Same with your gold, 10th ounce gold, grams, 2.5 grams, 2 grams, quarter gold, full ounce of gold. There's some diversification there when you're going to sell different markets, different price points, different markets. But with silver, you also have you benefit from another form of diversification with the different uses. Silver's used in medical equipment, water treatment, electricity, AI centers. You got the green mandate with solar, electric vehicles, things like that. It's also used in weapon systems, control panels, all kind of different things. So the uses of silver are also diversified, as opposed to an individual stock. There's also, unlike some stocks and companies that you can invest in, you have what I would call a global demand. Starving kids in Africa, they're not buying Nike shoes and Apple phones and flat screen TVs. I mean, they might, but not as prevalent as everywhere else, but the entire world does recognize gold and silver. So you have that global demand factor as well with the precious metals that sometimes you can make a case for that, the different stocks and companies don't have that. And so to wrap it up, stocks and gold and silver, they're both investments, and if I'm all right with routinely buying stocks at or near all-time highs, then why shouldn't I be all right with gold and silver and buying at all-time highs with them too? So that's all I got for today. Let me know what you think. Am I way off base here? Am I close? I'd like to see the comments turn into a discussion around this, because I think a lot of people aren't making that correlation on how they invest in other opportunities, and why they get so nervous when it comes to physical gold and silver. That's all I got. Thanks. I now have a P.O. Box, and you can write me at RuralStacker, P.O. Box 107, East Brady, PA 16028 0107. I'll be looking forward to see what you got. Until next time, keep on stacking and have a great day. Please like and subscribe and share this video out to somebody who might find it interesting. I appreciate you.